When did you buy your first Bitcoin?
I wish it had been sooner, but actually, and this is the value of having students and people and why I say you get taught backwards. I had a lot of people that were interested in crypto and they were bringing me our excellent market setups, and I was seeing these clean charts and setups, and they were breaking out and they were sometimes overperforming and they were making target and all of this, and I even did some drawings for people occasionally. They'd say, hey, I think there's a setup there, and I said, wow, yes there is. So they started bringing it into my peripheral vision. And that's why it's so great to teach as well, because you're getting upward educated by your folks saying there's something going down here. Until eventually one of the students I taught is actually running and has me now involved with him in an asset management capacity called Alphabet in crypto. And he sort of said, you know, your setups are all over the place in the market. You simply have to be trading. And I then started looking at it far more thoroughly. And I found what he said to be absolutely true. And that is this amazing intersection, which is why I encourage people to, you know, have a look at this as an opportunity. Certainly do all the defensive things and play safe, but you're getting an expansive market, which leads to strong trends, strong continuation patterns. I have a great methodology for that. If you have the right mindfulness, combination of methodology, mindfulness, and the idealized market, there's a real gift of an opportunity that's going down right now in here. And people could transform their, you know, their standing and wealth if they're involved in this. But they can't be too greedy, and they're going to go through those learning curves, because if they incorporate leverage or they start overreacting and getting emotive, then they'll be jumping in and chasing, and all of them. All the same errors will exist, so they have to be prepared to personally develop. But the patient, calm, methodology-focused person has an opportunity of a lifetime right now.
How do you spot trends and predict future prices of cryptocurrencies?
Yeah, good question. Well, trends is technical for me. So look at the charts. What has it done? Look at it since inception. In cryptos, many of them don't have great history. It's not like looking at pound, US dollar, or, you know, decades of history. But look at them, fill your screen with the chart, have a look at higher highs, higher lows, any patterns, recognize your patterns, draw your key levels of significance, look at where volume has come in as key moments. It should normally correlate with expansive price movements. Also look at what precedes the big moves. That's often the dissipation in volume, goes really quiet, spinning tops, small candles, low interest. Those are actually the points when everyone else is getting bored that you should be getting possibly the most excited, because volume returns with a bang. It dissipates slowly, and it also returns with a bang, much like the volatility. And in most instances, the volatility in cryptos is usually leading to upside expansion. So the continuation assumption usually serves you very well. It doesn't mean it serves you 100% of the time, every time, but it serves you very well in most instances. Occasionally, a little bit like now, we're getting a little bit volatile and it's a little bit to the downside. So there will be sell-offs.
How should we react when cryptocurrency is losing money?
The best thing is not to react. The best thing is to know that at some point, your high water mark is never your point that you'll be exiting. That's the problem everybody have. They look at as it going up, 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 they think that's the high water mark, that's what I'm worth. And you are worth literally what you get when you exit. And many people stay in the trade through greed and only get out on pain. So the problem is most people are usually exiting on a down move. So you get slippage, you're trying to get out with everybody else. It's a bit like someone screams fire in the cinema and then there's a horde at the door. It's the worst time to get out. You're part of the 91% hitting the exits. I know it's a drill. I'm sitting and I'm going to watch the movie in peace and quiet all by myself. So you want to be the 9% instead of doing that. So have predetermined targets. So when I'm expecting highly expansive moves, the reason why a geometric target is a good place to exit, because usually it means there's going to be a rest and pullbacks and everything before. So the most comfortable part of the move is when it's single-handedly going in your direction. The demand is dominating the supply, or if you're selling short, which I would certainly be very cautious of, the supply is dominating the demand. So those are instances, and that's how I'd go about it.